It's 10 o'clock. Let's get ready. A lot of stuff's going on. Market's down. I think market's down for the week. Question is, were you managed your portfolio correctly? Did you buy the right stuff? Did you sell the right stuff? Okay, let's just take our time. No rush to do anything right now. Let the market do its thing. There basically is two strategies here. Really, there's two strategies. One, you can chase some of the winners and cash out as you go along, which I'm not for it at all. In other words, you just jump on the boat with everybody else and you take the ride as the stock goes up. But the problem with that is the second it stops going up and reverses, that's when you're going to get hurt. So I'm never for that strategy. That's just not the smart strategy for me. Yes, you're going to make some money. You know, you do probably very well, but the risk is way too high. So I avoid that strategy at any cost. I know a lot of traders follow that strategy. They say, "Well, let's just run with the winners. We'll just go with it, take out our money." It's good, but it's not gonna work in the long run. It's not a solid strategy. You want to be in the business. If you want to stay in this field, that's not the way to do it. That's just for kids. The real 100% way of doing this thing is planning a strategy that's going to work. And that strategy is MicroStrategy trading is going to work. And I've said that over and over again. Yes, you will have down days. 100%. You'll have days that the market is up, but your portfolio is down. And vice versa. It doesn't mean anything if you stick with your strategy. If you do things according to what we talk about here, you'll have good enough days for the month that's going to give you gains at the end of the month. You know, come to think of it, you need 1 or 2 good days out of the week. That's going to give you a good payback. The other two or 3 days, if it's okay, if you have a little loss, no problem. But those 1 or 2 days out of the week, you'll have to have enough solid foundation in your portfolio that's going to give you the gain you're looking for. Now, what's that strategy here? Our strategy is not to chase anything down or chase anything up. I always tell you guys, if a stock is on its way down, don't go just buy in, your entire position thinking that, okay, it's going to go back up. It won't go back up. That stock will continue going down. It's on a downhill. It stops when it goes to the bottom of the hill. It's the same thing for the stocks that go up. It'll continue going up until it reaches the peak of the price. Who sets the price? Market does. Retail investors do. Machine do. Don't get caught in that draft going up or going down. It'll destroy you. Common mistakes. They call it falling knife, upward knife, whatever you guys want to call it. But what I'm saying is that, yes, you can buy as any stock goes up as a short purpose, okay, and you can buy it low as for the long purpose. So either way, this is a smart purchase. When you buy it, it doesn't mean it won't go down. It will continue going down at some point. But you have to be strategically planning to buy it at a time that's right to buy and not your entire position. When to buy, when you feel that the floor is here. Yes, you don't know 100% if the floor is there. There may be some fluctuations still. But you're going to have to set your foundation there. Pour your foundation there and build on that foundation. Don't rush into it. You're never ever going to get the exact price. You're never ever going to get what's that perfect price level that you're going to be picking up. It's just not going to work. You will pick up the price according to what the floor you think it's going to be. No one knows. No one. And then at that point, you start building positions. As the price goes down, you start adding. And at some point, it stops bleeding. Clear example right here. Live portfolio. We're going to go right to the bottom of my portfolio to see my smart buys, to see if there's any cash we can take out. Down market, right? Shack. Been going down for quite some time. I build my position. My entire position is $6,000 right here. I could take out all of these gains right here. See it? Even this one. Even these right here. I could take out a lot of gains right here. And I'm left out with my core pricing that was here. These two batches right here, 20 shares. I can sell the entire position if I want to. I still have gain on it, but I'm not going to. That's my entire position on it, 6,000. I didn't go crazy and buy more as it went down. I set my core price. I said at $90, I feel from 107, 90 may be a reasonable pickup level. I picked it up and I went down all the way to 81.97. As I went down, my quantity purchase reduced. From 10, I dropped to 5. It works always this way. Here's another example. Las Vegas. It's been hammered. Here we go. Started with 10, 20, 20 again, went down to 10. I can pull out all of these gains right here. And I should pull it out because I don't know what Monday is going to happen. There may be more downgrades. There may be more Chinese issues on it. Who knows? I don't know. But I know I got to take my gains out of it. Here's another one. ARC. On a down market, I'm pulling out gains. Now, my position size is bigger than your position sizing. I'm 5,000 here, so you cut it down by whatever size the portfolio is. Here's another one, UAL. On a bad market, I set it up in a way that I can cash out, started positioning at 45, all the way to 43. You know, we're in a normal market conditions now. Market goes up, market goes down. We're not in a recession level right now. Recession level is gone. Market got over it with the corona. It's gone. It's finished. Market is thinking about other stuff ahead of the game right now. Recession, Chinese, all the other stuff that's going to come up. Taxes. So market's thinking about that right now. Recession. The corona is gone already. So these are normal conditions for the market to worry about. Or remember the China and U.S. trade war. That was an issue for the market. But those are the conditions you want to make money. Those are the times you want to get in and start building positions. Here's another one, RL. If I need the cash, I can take out 10 shares. What else we got down here? Chinese. I've been telling you guys, build your Chinese position. I didn't fall for Billy when it was 86. I started building position from 75. And I felt that at that point, and I've been telling you guys, at that point, I've been watching it and I know where the floor is going to be. Here's another one right here. Metafest. I had some shares yesterday. 5 shares, I think, at about $40, $50 gain. This thing, I know the floor is right about here. Maybe it goes down another couple of points. But it won't go down to under 200. I know that. This is a good, solid company. It has been growing and it is far away from its 52-week low. BBY, there's a bunch of stuff right here that we can take out gains. Bubba is my favorite position. I built up 100 shares. I could take out some gains out of it. But you know what? Bubba's got a lot of way to go up. A lot. It's going to go up higher than that. I'm guessing Bubba will go up over 200. I'm just going to have to be patient with it. So I don't want to take out my gains right now, although I can if I want to. Get a whole lot of them here, a few $100s worth of it. So you can either go start doing your chasing game that it's going to tire you, it's going to get you exhausted, and it just at some point you're going to become a bag holder. You're going to be sitting on that position for months or if not years. Or you can practice this strategy and be cautious and plan it right. Here's another one. Ring Central. Very, very fast moving stock. But well, let's not forget Zoom right here. Zoom, another recommendation. Zoom hit the pretty much 52-week low. Yes, it suffered long enough, but it's bouncing back right now. You see, I started with 10, and I started going back to 5 and 2 and then 1. I said, okay, I'm done. I built my position. I'm not going to go forward. I'll just wait. Here's another one, Ring, as I said. My position was about 5,000. I was buying more, but I stopped. 511. I could take out 2 shares at $25 gain almost. Okay, so you'll have those ups and downs. Don't buy your entire position size one time. You're going to get screwed. You're going to be stuck with that for months. You know what that means? That means you just erase your buying ability, your buying power by buying one time like that. So don't do that. Okay, market is down. My portfolio is fairly flat because my shorts, I have some shorts, and some of the long positions are pretty much balancing, keeping my portfolio fairly flat. So I'm waiting for that big payday right now. Why? Because I've got some large positions, including LMT, Lockheed Martin, which I decided to go heavy on. I know that's going to pay back. I know Triple M, that's going to go back up. That's a over $200 stock. Easily will go up soon. Okay, so at some point, you don't necessarily have to sell the stocks you think they've come down significantly. You can hold on to them for a little longer for bigger payback. Stocks like Bubba, that's been destroyed. It's a great company. It will go back up. Market down almost 130 points. My portfolio is flat. It's a good sign. It shows that I have a balanced portfolio. I just need the market to reverse a bit so I can cash out some gains. But the gains I want to cash out, I prefer to wait on. I don't want to cash them out by the end of the day. I'm just going to wait a little longer. Okay, so with that in mind, maybe it's a good time right now to do some shopping. And we'll start from the bottom, top of the list, which is all the losers up here. I was short Black yesterday, BlackRock. I converted to long, 1 share only, and I'll wait for it to go down. Same thing for RH. At some point, I had to convert. I went long. Okay. So going down the list right here, let's see what we have. Lam Research, definitely short. Not going to touch it. Adobe short. All of these remain short. Here's a good one right here. Snap-on. Good company. Down 6 points. Obviously bad news. Obviously some issues. But remember, they're all temporarily. Unless the company is going out of business or going bankrupt, this won't be down 6 points. It will be down 60 points. Otherwise, it's a company you want to start building positions on. I am short on that. So what I do is I'm going to close my short position on it. And I'm going to start building a long position on it. I'm going to cover. And we will go ahead and set up a watchtower for this. We're going to watch it. I'm not going to jump in. You see, it's 212.41, 213. What does that mean? Yes, it will go down more. So no rush to buy it. Monday could be 210. Wouldn't you be pissed off that, this you could have picked that up at 210? Yes, it would be. And it's okay if it goes back up. No big deal. Let it go back up. Okay, so again, these are all overpriced up here. Everything is overpriced. Okay, Deere is down, not down enough. Although I'm up $22 gain on it, but I prefer to wait on it. Not going to convert it. We have Pan W. These are all shorts that need to come down. MasterCard, good company. I got 6 shares on that. Fairly down, almost halfway point from 52-week. I can start building positions on it, so I'm not going to go heavy on it. I'm only going to go 5 shares on it. 5 shares. Okay. 341.10, 341.32. What does that mean? Stay away. Let's move on to the next one. IPGP. See that? Very close to 52-week low. Down 4.5 points almost. Let's look at the way I purchased it. I purchased the 10 shares at 170. I'm only down 26 bucks if I need them cash. But for me, it's an opportunity to add to it because it's another company that will jump up again. Look ahead. Think ahead. Don't be nearsighted. Look what this thing's going to do for you a month from today, a week from today. Okay, 167.47. Here's another one. Do not touch it. Very close 52-week low. We can pick it up later. Don't forget 1 p.m. rule. If you guys are missing out this video, honestly, you shouldn't be in the business. I am showing you what you guys need to purchase here. I am telling you what's down. Pretty much these are the best companies on this watch list right here. Who shows you the watch list? Who shows you the portfolio? No one. Everybody shows you this graph and thinking just follow this graph and all these analysis is going to work fine. And I'm not going to listen to any analyst out there. They say something, stock does something else. Okay. What else we got in here? So we decided we're going to stay away from those 2 stocks. These are all overpriced. We're not touching anything with QCOM. We've been building positions on this for past few days. 134.30. Again, same issue. You see it? Bleeding has not stopped. Let's take a look at the way we purchase QCOM. See it? 145, 141. This is amazingly smart purchasing. Don't buy at 145 and then the next day 146. That's ridiculous. Look at this. September 2nd. My next purchase September 14. If I buy it today, it's September 17. That's 3 days later. I'm buying it at an additional discount of 134. But I'll wait because I'm going to wait for the floor to come down again for the day, not for the entire stock. Because at some point it's going to stop and it'll just reverse back up. Solid company is not going anywhere. Your money's in good hand here. These are all overpriced. We're not going to touch any of this stuff. Let it come down. They all need to come down. Okay. These are all overpriced. Everything's high. Not touching anything. Syntas, I was short on that. Remain to be short. Needs to go down for quite some time. Rockwell, Stryker, American Water. They're all over. But there's no deal here. Okay, here's another one. Visa. Visa, of course, will move with MasterCard. See it? Again, smart purchase. For 10 shares, 9.10 a week ago at 224. I didn't rush back in to buy it at 223 a couple of days ago. I said, you know what? I'll wait. Today's the time to buy a little bit more. So we'll go in here, Visa. We're going to do 10 shares. 220.67. Again, we will stop. No touching. We're not going to touch it. We'll go back to it. So be it if we lose that opportunity. I prefer to lose the opportunity of losing than gaining, because I know if it goes down more, if I buy it now, I'm going to lose money on it. Okay. Match had a good run. It's high up. I'm short. ITW, I had a couple of shares. I think I sold 10 shares. So another opportunity for me to pick up. All the industrials are getting crushed. ITW. 214.88. Same issue. You know what? If you want to be daring, we can go 10 shares. we can do 213. We're going to estimate based on the drop and the time so far, an hour past the market. We're going to guess at 213.50 may happen. We're going to pick it up at 213.50. We buy this at 213.50. It may happen, it may not, but it's no big deal. Okay. We have here, okay, this take two got hammered. Analyst came out, but listen, it's been going down for quite some time. I've got only 10 shares on it at 157. Let's see what it does right here. Take two. 149. Okay, it looks like it's beginning to bounce back a bit. So I think at 10 shares at 148.85, we may be able to get a deal on it. Okay. Mining's getting hammered, but again, I've been buying them in small quantities. Let's take a look. 76 and 70. Started with 79. Today is 67. We're just going to give it another shot. Rio, let's buy 10 shares. 67.18, 67.45. You know what? It may go down longer. We're going to take a $670 risk on this. It's worth it. We may catch it, we may not. Cat, good company. Gone up way too much. 200. Again, let's take a look at it. I bought 5 shares yesterday at 203. You see it? Another 5 shares 2 days before that, 205, 208, 210. This is smart purchasing. I'm not buying all my 30 shares at 210. So I limit my losses. I can buy another 5 shares. Let's take a look right here. Cat. Another 5 shares. I think a 200 would be a good deal if we can catch it. It's a $1,000 risk. It's not a risk, it's actually a $1,000 investment. Listen, you've got to be bold. At some point, you're going to have to pull the trigger. Yes, you will have losses on those positions, but your loss is going to be minimized and your losses are going to be contained. And you'll have to wait until it bounces back. FedEx, I had some shares I sold yesterday. It's a good company. But before we go to FedEx, let's see what else we got in here we can pick up. These are all overpriced. We're not touching anything here. Okay, Triple M. Absolutely a fabulous, beautiful company. I'm going to do 4 shares at 179.50. See it? 179.50. If I catch it, that would be great. If not, I'll move on. I don't care. No big deal. No rushing, no racing, no chasing. Taking your time to build the foundation of your portfolio. This is real, true trading. You make some mistakes along the way, but it's okay. Your mistakes are contained. Your losses are contained. Here's another one. FedEx, just very close to the 52-week low. Okay, I'd like to buy 5 more FedEx. Keep on dropping, but I think at 255 it may be a good deal. I did sell some FedEx this week, but I wouldn't mind picking up 5 more shares. You see, I'm reducing the quantity of my shares. Don't go 1s and 2s. Stay away from those 1s and 2s. Go 5 and 10s for the size of the portfolio and for the stocks that's going to work for you. PPG, all the industrials are getting smashed. PPG, I used to Buy PPG products. I'd like to buy 10 shares. See this? 147.35? Yes. Don't violate the rule. Let's go with 5 shares at 147. 147. Okay. We're not going to be greedy. Let's get whatever we can spend. Okay, what else we have in here? Freight company is still expensive. CDW expensive. Apple. I'm building position in Apple. See this? Yes, it's gone down from 147.57 to 146, but I like to buy 10 more. It's no big deal. My loss is only a couple of $100. But you know what? Your money is so safe in Apple. There's no other company in the world that's gonna keep your money in a very safe position. Lowest is 146.56. I think at 146.60, I'm willing to be buying 10 shares of it. Okay. What else we got in here? NTS, this is the Chinese company I bought yesterday. I'll wait on it. Logi, I'd like to buy 10 more shares possibly. Uh, 94.12 looks like it bounced back from the bottom, but it doesn't mean we'll not go back to the bottom. So I think at 10 shares, I'll be a buyer at 94.30. Because you know what? Market's going to do crazy stuff. Maybe by the end of the day, market's going to come back down 300 points or sometime 1 o'clock. That's when all your stuff gets picked up. Okay, what else we have? Okay, Northrop Grumman. I've been buying Northrop Grumman. I still think it's a little overpriced. I'll hold off on it. No rush to buy. Global Payment. I have enough shares here. I don't need to do any more buying. I'll just hold off. But maybe I'll just buy 5 more because I had a lot more shares in Global. Five shares. 161.85. You see it again. Same thing. I think at 161 we may be able to get a deal on it. Okay. Let's just go back to the bottom to see what we have in the bottom of our list. To see if there's anything worth cashing out in a crappy market. Let's see, bottom of my list. Zillow, I've been building positions on it. JD, these are all I can cash out beautifully. I've been building position in Tree. See it hit the bottom somewhere here, 157. It hit the bottom around this price of 156 actually. Okay, what else we have in here? I can cash out some shares though, no big deal. Manifest this is the company that may shoot back up really quick. Here's one company that I've been building positions on right here, Lucid. You see it? 260 shares. I told you guys I went to visit the showroom. I love the car. And that may be the next better version of Tesla. Up 2 points today. I'm up $532. Yes, I can cash this out, $709. But you know what? I'm looking ahead. I'm saying a year from today, this may be a $50 company. $50 share company. That's what I mean. It's a $30 billion company right now. But it will go up higher. So I'm confident this is a good buy and I'll hold off to it. Here's another one right here. For all those suckers that thought Zoom was going to go down a lot more, I can cash out all these shares right here. All of these guys I can cash out. Take out plenty of equity out to buy other stuff. Ring Central is another one that I've been telling you guys. So anyway, there's plenty of cash I could take out here if I want to. Do I need to? I don't need to right now. I'll hold off. Bottom line is be smart. Smart buying. Don't do a FOMO job. It's not going to get you anywhere. All right, guys? Enjoy your day. Happy trading. Have a good weekend. If you have any questions,